Okay. So the last of the ancillary benefits, I wanted to make a separate video for dental and vision, because oftentimes dental and vision are lumped together, but life insurance is, my humble opinion, and a lot of my colleagues' opinions, much more important in the grand scheme of things. And most people want life insurance. It's not necessarily a sexy thing to buy, but they do want it. And offering it through the company is a nice gesture, and also very reasonable to do so. I'd say even more reasonable than oftentimes dental and vision coverage. But there's three types of life insurance. Okay, there's term, there's whole, and there's universal. So the first term, that one is the least expensive, at least for younger folks, typically the least expensive. And you can get a lot of it for a low price. Usually best to get it when you're younger, but the downside is no cash value accumulation with it, but you can get a decent amount of life insurance for cheap, especially the younger you are. Whole life insurance, meaning whole life. It's permanent life insurance. So you can set it up individually to where you only pay into it for 20 years or so. But if we're talking from a group perspective, whole life's also a great option. It just is a plan that essentially a portion of the money that is put into the plan goes towards the insurance, and then another portion goes towards the cash value of the plan that has a guaranteed interest rate in most cases, and can sometimes fluctuate a little bit, but you'll see somewhere between like a 2 to 5% interest rate. I've seen ones as high as 6, and the premiums for that plan are the same throughout the individual's whole life. Okay. And then they can borrow against it and take money out and take a loan, basically. The third option is universal life insurance, which is a little bit trickier to understand, but still, it kind of takes best of both worlds with universal and whole, where a whole life insurance policy, you're going to see a higher premium than a term for any amount of coverage. But with a universal life, and some life insurance companies are more secure than others, where universal, sometimes it might be in the contract where you may have your premiums raised for whatever reason, and it's not up to you, or there's no guarantee. But I haven't seen that personally, but that is a big worry for people in my industry offering universal life. But I've never personally seen it with any of my clients. But nonetheless, universal life insurance, it is like whole in the sense of it has cash value, but it's similar to term in the sense of the premiums are typically less. So what you can do with a universal life is contribute an amount to the insurance portion, just like you would with a whole. And then you usually will have a higher window of what you can contribute to the cash value side. And as you get older, your cost of insurance may go up. So the amount you contribute may also need to continue to go up to continue to get those gains. But that is the difference between a whole and universal. You can typically contribute more to the plan, and the premiums are less. They may get more expensive over time, and they can fluctuate. So whole is better for folks who want something more secure, guaranteed. Universal has a chance to lock in more gains. And other things to consider. So one writer on a particular program that I've deployed in multiple accounts and groups was a universal life insurance program that also had a critical illness / accelerated benefits rider, meaning the policy was kind of used as long-term care insurance. It wasn't exactly long-term care insurance, but like the face amount was $100,000, for example, and the if the policyholder ever got diagnosed with needing long-term care, what would happen was that $100,000 would actually double to $200,000 in benefits, and the individual could take 4%. Yeah, 4% of off the policy a month. So $4,000 a month of that 100,000. And then if they depleted it, it would go back up to 100,000. And then if they passed away within that time, then whatever's left on the plan, they would be able to pass on to the beneficiary. So they could get something out of their plan. So it had cash value, but also had the ability to be converted into a policy that would pay the person that cash value, or the cash value amount of the life insurance policy per month for a certain amount of time until the value ran out. So that was pretty unique. The second thing to consider with group life insurance is if you can get guaranteed issue. Another big thing with these programs that I brought in was that they were guaranteed issue. So I've written a lot of life insurance on the individual side for business owners and for just, average everyday Americans alike. And in that process, there may be some extensive underwriting. There may be financial underwriting. Have you had any bankruptcies? Have you had credit card debt? All this stuff. Health, any type of health condition can not necessarily deny you coverage, but it can jack your rates way up. And a lot of folks are living with things like diabetes, other chronic conditions that are, fairly normal to have, unfortunately, as we get older. So having guaranteed issue inside the company can sometimes be the only chance an employee has to get decent coverage. I've worked with folks that are in their 60s past that didn't have life insurance, or it expired and they didn't take it with them, or whatever the case may be. And we struggled to just get them a $10,000 policy that they could afford, because of their health. So that brings me to my last point of portability. Other thing to consider: can the plans be portable? So if an employee signs up for the program with your company, can they take it with them when they retire? Something to highly consider, because a lot of folks retire and they don't have life insurance because they kept it with their employer, and then it's gone. So portability is another big thing to take into consideration. But nonetheless, overall, life insurance in general plays a very important part in everyone's lives, because we all will die, obviously. And we all know that. It's not as fun to talk about. But at the end of the day, what it does is it provides a tax-free lump sum of money to a beneficiary or beneficiaries in order for them to do a multitude of things depending on the amount, right? Like cover funeral costs, like final expenses, also cover if it was a sudden death and it wasn't necessarily as planned for as well. Something like mortgage payments, car payments, other bills that aren't getting paid now because of the death of that individual. Taxation on a business, or taxation on a 401k plan or an investment account that the IRS is taking back on. The life insurance provides this big lump sum of cash that's tax-free that is really unique to any other type of thing that can be given at the end of someone's life. So, that being said, in my opinion, and I think a lot of brokers' opinion, between dental, vision, and life insurance, the most important of the ancillary is life insurance. And other things to consider: is it going to be term, whole, or universal? Will it have any riders like long-term care? Will it be guaranteed issue? And can employees take it with them? Those are all things to consider.